How's it going? Good mornings all around, guys. Ladies and gentlemen, this is the start of the Trading Mindset YouTube live stream where I go over not only the emotions of trading, but also a little bit of strategy and a little bit of technical analysis towards the end, just to give you guys a format update towards the end of the stream. We do a little bit of live technical analysis with chart requests. So if anybody has a specific pair or specific coin they'd like me to do a little bit of chart analysis over, you can drop that either in the Discord chat or you can drop that in the live chat for this stream. Before that, we do a little bit of a lecture, a little bit of a lesson, just 4 or so slides on PowerPoint, in which I go over just a few little tenets of trading, and hopefully we can learn something this week as well. This is the number 5 live stream of Trading Mindset. So if you like to go back and review any of those previous VODs, VODs, or basically stream recordings, you can do that on YouTube as well to get a little bit more background on technical analysis, because it is pretty linear what we're teaching here. But just an announcement, we do have an update for the giveaway this week. Last week's giveaway, we actually only had 2 participants, so super great odds for winning that $50 derivatives bonus. If you have a Bybit account, this week we will be just doing a spot giveaway, so $100 tether. If you would like to enter that, go ahead and either stick around towards the end of the stream. We'll be doing that in probably about 50 minutes. We'll be giving away some tether, and it will be completely random, so you don't need to take a quiz or do anything like that. All you have to do is submit either your Discord or your Telegram. So if you don't have a Telegram or a Discord and you'd like to enter that giveaway, go ahead and start setting that up now. Y'all will have plenty of time for that. But let's go ahead and jump straight into the little presentation I've got set up. Let's do it like this. This is called Trading Mindset. My name is Brandon Zayat. I'm part of the YouTube and content team over at Bybit. We're making some good stuff. If you'd like to check out the Bybit YouTube channel, we make a video that comes out just about every single Monday, and these live streams come out every single Friday. So if this is your first time entering the live stream and wanting to get a chance at these juicy giveaways, go ahead and throw it on your schedule moving forward. Just a quick disclaimer for this live stream's presentation and the technical analysis at the end of this video is for educational purposes only. Hopefully you guys can learn something from what we go over today, and it should not be interpreted as financial advice or an investment recommendation. Trade and invest at your own risk, just the usual stuff. So let's go ahead and get started with picking coins to trade. This is something that I've been asked quite a few times in the past, I think even in this live stream, but let's go ahead and get started. So just for an overview, the process of picking coins for trading or picking a trading pair, a specific pair, it's highly subjective. It's going to depend on what you're feeling for the day, what your usual technical or chart analysis looks like, and whether you prefer either the long or the short side, whether you prefer a specific coin. But as usual, I like to try to remove as much bias from these processes as possible. So don't go picking a coin because it's got a cool name. Pick a coin because the chart looks good. That's what I like to do. And it doesn't depend on a strict set of rules. So I don't have a strict set of rules that I write down whenever I start looking through the charts. I do have a favorites list. You'll want to simply find out what works best for you, and that's going to come with experience and checking out the charts you like best. So a favorites list is the best tool for narrowing down options, but the choice itself will be solely dependent on the chart. So although I do have a favorites list of about 10 to 20 coins that does fluctuate, I won't only look at that list, and I won't only trade coins from that list. I trade coins based on the chart because that's what our strategy is dependent on, is the specific price action itself and how the chart looks. Familiarity with specific pairs will help you in the long run. It's very useful finding maybe 3 or 4 pairs that you can trade over and over and over again. And I've spoken about this in the past in strategy videos covering trading ranges and repeatable trades that you can make maybe once a week, maybe once a month over a long-term period. And gaining familiarity with specific pairs, I believe, helps you out in the long run a lot. Because as you become familiar with those pairs, you will understand how the price action in the chart itself, the price of the coin or the pair, actually reacts to your technical analysis. So having an understanding of that will grow over time. Scanning potential charts may be aided by a mental filter. This is something that maybe you just wake up in the morning and you say, I'm looking for an intermediate term trading range, or I'm looking to long, I'm looking to short, looking for a coin that's potentially breaking out. But yet to confirm, maybe that's just what you're feeling for the day or what you're feeling for the week, what you've been confident with over the past, couple weeks. That's completely fine, but don't really restrict yourself. So if you see something outside of that, if you're looking for long trades and you see something on the short side, don't feel like you really have to restrict yourself. So once a coin or a pair has piqued your interest, I like to go through just a quick little mindset set of rules, just quick analysis. I call it identifying the rough technicals. And what I like to do is first identify if the trend is bullish or bearish. This is going to be one of the most important first steps that you can take. Also, go ahead and zoom out to the longer time frames. If you're on the weekly, zoom out to the monthly. If you're on the daily, move out to the weekly and the shorter time frames as well, because those time frames will affect your current candlestick time frame, your current position outline. So where are the heaviest local supports and resistances? Once you've determined that we're either in a bull or a bear trend, or maybe a sideways trading range, consolidation, accumulation, anything like that, you want to make sure that you are kind of measuring out where your potential support and resistance levels are, especially if that's a main tenet of your strategy. Finally, is volume falling, rising, or stagnant? This is going to help you out in terms of the timing of the trade. So determining if the trade, you might see a good breakout, you might see a confirmation in the next couple hours or the next couple days or the next couple weeks. Volume will tell you a lot from that standpoint. If the pair is against Bitcoin or ETH, and we did talk about this in the last video. So if you'd like to learn my stance on trading versus US dollar tether, versus trading against Bitcoin or Ethereum, specific fluctuating pairs, you can actually check out that last video, and I went into it a little bit more in depth. So what is the trend for those coins? What is the trend for Bitcoin if you're trading ADA to Bitcoin? What's the trend for Bitcoin as well, not just ADA to Bitcoin in your specific chart and pair? Finally, where would I enter, exit, and set a stop loss for this pair, and what's the risk-reward ratio for those levels? Really, again, just a rough breakdown. And then once you go through all of these steps, you start to get a little bit more specific, a little bit more technical. It's just a rough technical outline. And then you go ahead and build your thesis, your trade thesis, and your outline to go along with that, explanation for everything. Next, we have long-term charting. So a lot of people say, all right, the long-term chart's exactly the same as the short-term chart. Everything implies the same, but that's not necessarily true. There are a lot of differences in terms of trading outcomes and setting up your specific trade if you are on the weekly or the monthly chart versus if you're looking at the 2-hour chart. Volatility is the very first thing that comes to mind, as well as the magnitude of your sell targets and your stop losses. So if you're on the weekly or the monthly chart, you might be looking at a 15, a 20, a 30% sell target. On the 2-hour chart, you might be looking at a 2% sell target, especially if you're trading with leverage. So go ahead and make sure to confirm what, or if you are on the long term, and set a mindset specifically for long-term trading, because it's going to change just a little bit. And as we get into the end of the slide, I'll explain that you might not want to make a lot of trades on the long term if you're a swing trader. So long term is typically associated with weekly and monthly candlestick time frames, but obviously there are longer time frames, the 3-month candlestick time frame. I've used that a few times. A lot of people like to analyze Bitcoin that way for really long-term chart analysis, but you can also benefit from the daily time frame. I also sometimes use that for long-term trades and positions. Longer time frames will almost, in pretty much every situation, except for a few, supersede the shorter time periods. So I've spoken about this in the past, but basically an example would be the 1-week resistance holds more significance than the 4-hour resistance. So if you're drawing a 4-hour resistance on your chart, go ahead and zoom out to the daily in the 1 week. And if you see a 1 week maybe a little bit below or a little bit above that 4-hour resistance, maybe put a little bit more weight onto that weekly resistance, especially if there's more confirmations. But yet again, go ahead and switch back and forth between those. And if they're all perfectly aligned, then you don't even have to worry about that. You're very set up. So benefits of reviewing the weekly and monthly charts include a reduction of visible randomness. So really tiny, that little, whenever I talked about trends, I spoke about how you can compare, or in the book I was reading, they compare trends, long-term trends, intermediate and short-term trends to the ocean. So a long-term trend, you're talking about or comparing it to the tides. You see twice a day that the tides change or that the tides rise or lower. And then as you zoom into the intermediate term, you're looking at the individual waves. And then the short term are those tiny little ripples between those waves. So within your waves, you've got ripples. Within your tides, you've got waves. So this removes the randomness, specifically those ripples and sometimes even those waves by looking at the long-term chart. You have more clearly defined trends. Now, not always you don't need to say they're more clearly defined. You can just say they're more defined for the long term. So if you're looking at your long-term trend on the 4-hour chart by zooming out to the weekly or monthly, it's going to be a lot cleaner and it's going to be more obvious. You're also going to get a little bit more significance from those individual candlesticks. Finally, the persistence of support or resistance areas. We see this a lot on the Bitcoin chart, as well as something like the Cardano and the XRP chart. A lot of charts that use psychological support and resistance. Maybe we're looking at the $1 area for XRP or for ADA. But for Bitcoin, maybe we're looking at the $20,000 area, or the $40,000 area. If you're looking at the weekly or the monthly chart, you're going to see more alignment at those levels than something like the daily or the 4-hour. On the daily or the 4-hour, we're going to see more of what I like to call slippage, or whenever our candlesticks close below our support or resistance, but it's not really representative of the overall time frame or the overall trend. So even though we see a daily close below 40,000, say, if you zoom out to the weekly or the monthly, we're always holding above 40,000. So we can go ahead and say, all right, 40,000 is probably a little bit better because those longer time frames and the support and resistance levels you find on them usually supersede the shorter time frames. Finally, while standard TA patterns and formations are still applicable to the longer time frames, knowledge of the psychology behind individual stick formation becomes almost vital. I know that's a confusing sentence. It was confusing to write it as well. Basically, what that means is individual candlesticks. And we spoke about this in the last live stream. We spoke about how there is a psychology behind the price action of and the formation of individual candlesticks. So we see our candlestick open and our close, and there's psychology behind why, in terms of overall and global trader sentiment, why we opened at that level and why we closed higher or lower. So the reasons for why we closed higher or lower will just be a little bit more significant on the longer time frames. Finally, due to the inherent nature of the long-term time frame, trades are less common in terms of swing trades, in terms of individual trades. Usually, in terms of my strategy, I like to look at the longer time frames for just long-term trends, sentiment analysis, and just general direction of our either Bitcoin or pair price direction. So a lot of the times you won't be using them for individual trades because personally, I don't like waiting around that long. I don't like waiting for 20 more days for that monthly candlestick to close. I want that 4-hour candlestick to close in the next few hours. I can get in and I can get out within that week versus waiting for a monthly candlestick to close for your entry, and then also possibly waiting for a monthly candlestick to close for your exit or your stop loss if you trade that way. So it definitely goes ahead and makes it a little bit more difficult, in my opinion, to trade whenever you're looking at the longer term time frames, but it is important to look at them whenever you're on the daily candlestick time frame, whenever you're looking at your intermediate term, in terms of the significance of those support and resistance levels and our overall trends. Next, and this is going to be one of my favorite little segments. This is all coming from Market Wizards by Jack D. Schwager. I spoke about some of my favorite books in terms of trading psychology and technical analysis itself, I believe 2 live streams ago. But we're going to go over Bruce Kovner real quick and just a couple of the lessons that he's learned as a master trader. He was pretty popular in the late 90s and early 2000s, got a lot of press and he did get a lot of press, but he never did interviews. That was something very interesting about Bruce Kovner. And it is a rare instance that we actually saw him sit down with Jack D. Schwager for an interview that was eventually written and published in his book, Market Wizards. It's So just some background. Bruce Kovner is praised as one of the most historically successful traders in the interbank currency and futures markets. So a lot of volatility there, especially interbank currency. Futures depends on the actual asset. A lot of volatility that we should be able to apply, or hopefully we'll be able to apply these lessons to cryptocurrency. We might have to manipulate a couple of them, despite his low profile. So despite not doing a lot of interviews, not having a huge public image, he was a master. He averaged an 87% annual compounded return between 2002 and 2012. So that's not 87% per year, every single year, but it's compounded in terms of the average of that 10-year period. So just from a trader standpoint, 87%, even compounded, is insane to me. Just reading some of these statistics about these traders in this book I'm going over, it's just unheard of. Oops. So some key takeaways and quotes from this interview and just the general sentiment and psychology of Bruce Kovner. He likes to say that risk management is the most important facet of trading. And we spoke about this in terms of risk and reward ratios. It all goes into risk management, where you're setting your stop losses, making sure that you are setting stop losses for every single trade. Now, for a lot of these institutional traders, a lot of these traders from the 80s, 90s, early 2000s, they're not necessarily talking about, in terms of risk management, always just a straight up trade. So not just buying at this point, selling at this point, and setting a stop loss just below for a long side trade. They're talking about laddering their positions, building their positions, adding to them, detracting or subtracting from them over time. So it's a little bit different, but it can still be applied, and the lesson can definitely be applied to crypto. So he has what's called a 1% rule, and pretty much every trader has some type of percentage rule. 1% rule in this circumstance means that he doesn't risk any more than 1% of his overall holdings, his overall portfolio in one single trade. Some master traders will say no more than 5%. Some will go up to no more than 20%. But he likes to say 1%, especially in the specific markets he's looking at. For cryptocurrency, I'd like to say make that decision on your own based on what you're seeing. So maybe an average, maybe looking at commodities traders, maybe looking at high volume or high volatility futures traders, and saying, all right, crypto is pretty similar to high volatility futures, or maybe you're actually trading crypto futures. Maybe right around 4 or 5% is the max for me. Go ahead and set a rule for yourself at the very beginning of trading, or if you're just in the middle, it's always great to have a few rules to stick to. He likes to say always under trade. I think this is very interesting. A quote from him is, whatever you think your position ought to be, cut it in half. Now, looking back at a lot of my historical positions, this would have been fantastic. And it actually would have not been great for a couple of the other positions. But overall, and I think this especially applies to newer traders, whenever you're opening up your first few positions, or probably within your first 100 trades, this is a very good lesson to follow and a very good rule to go ahead and write down in your notebook, is just cut your positions in half. If you got $1,000 that you're willing to trade, so your overall portfolio value, and you say, all right, I'm probably going to trade $100 for this position, that's 10%. If you cut that in half, you're looking at 5%. We're starting to align with minimizing the loss towards the beginning of your trading journey. Towards the beginning of your trading journey, I always like to say, start trading small. If I had one lesson, if this was a page on my personal stance, not Bruce Kovner, but Brandon, number one thing would be, as you're learning to trade, start as small as possible. So aligning that with cutting your position in half does make a lot of sense to me. He also likes to say the market is impersonal, and personalizing the market takes attention away from the diagnostic process. So what this means is, especially in the intricacies of the actual, he kind of had a pretty long section on this, but basically, don't take a personalized stance towards the market. Don't think it's you versus crypto. Don't think it's you versus the market. It's you versus yourself, interpolated with your personal strategy. So don't think the market's out to get me. I've had 6 losses in a row towards the long side. The short traders are against me. Think, all right, I need to change my strategy up. I'm not doing well in terms of my personal strategy and my personal trading. Next, a couple really good quotes that I like to go over. He says, the more a market is the product of a non-speculative activity, the greater the significance of technical breakouts. So applying this to cryptocurrency, we can think about long-term Bitcoin trends, or even intermediate-term Bitcoin trends. So if we see Bitcoin rise 12, 15% in a week, or even just a few days, like we've seen not more often than not, but quite often, definitely more often than most markets out there, these extreme volatility, these extreme bull runs. If you see a market move like that, a very nice technical breakout, and then you go ahead and check the news, you check your CoinDesk, your CoinRadar, your crypto Twitter, and you don't see anything like Apple's now accepting Bitcoin, or Apple's now activating Lightning Network for payments, or any big news associated with that large price movement, we're actually usually going to see a very strong technical breakout. So whenever we see speculative activity associated with something like news and we see a nice technical breakout, it'll actually be a little bit truncated or a little bit shorter compared to something like a breakout when there's no news, or a big breakout when there's no news, a really good confirmation towards the long or the short side, and there's nothing to really align with that in terms of news. Go ahead and expect that we'll see just a little bit larger of a breakout or breakdown. Finally, he likes to say, don't get caught in a situation where you can lose a great deal of money for reasons you don't understand. And this goes into the trading outline. I like to say, whenever you're forming your thesis or forming your trade outline, before you even enter your trade, go ahead and write down the reasons for not only why you're entering the trade, but after, or even you can do it before. If the trade fails, it's most likely for this reason, or you can even do it after. So after you see, maybe you hit a stop loss, go ahead and look back at that chart and say, it looks like we actually didn't hold that support too well, not as well as I thought we would. We come down and we did hit that stop loss pretty well. But if you don't have a specific reason, or a reason before you enter the trade for why you're entering, then you're going to be very confused as to why what happened. So that's just a nice little lesson. And he likes to wrap it up by just saying that if you're caught in a situation where you can lose a lot of money, make sure you have a reason for that possibility happening. So if you set a stop loss at negative 30%, you better have a pretty good reason for setting it so low instead of it, minus 4%. So next slide, and I believe this is the last slide before the giveaway. We're going real quick on this one, and we'll do some chart analysis and do that giveaway. That'll be fun. So Bollinger Bands strategy. And before we even go to that first note, I would like to say any type of indicator you're using, do not use it by itself. Make sure that you are using either other indicators on your chart, or you are aligning it with confirmations based on price. Personally, I wouldn't use a single indicator without price confirmation. Indicators tend to aid your actual strategy rather than being the foundation of your strategy. From my standpoint, a lot of people have good strategies that are completely based on moving averages, death crosses and golden crosses, Bollinger Bands themselves, Ichimoku clouds. Everybody's got their own strategy, but personally, I make sure not to use an indicator by itself ever. Even if you're just adding volume to price, that is enough for me. But using Bollinger Bands by themselves can be a little bit risky, but obviously it's going to work out a little bit differently for everybody. So Bollinger Bands, or we'll refer to them as BBs, were created by John Bollinger. I believe he's still on Twitter. I follow him myself. I think he's at BBands, but he does have some hot takes every now and then. He does like to carp at a few other old traders. I can't remember the guy himself, but he's actually pretty entertaining. And every now and then he does give some pretty good insight in terms of crypto. So he's not super into crypto, but people will ask him questions and he does reply. So somebody might be like, what input should I be using for Bollinger Bands for crypto in the intermediate term? And he'll actually reply. So he's a great follow, or just somebody to check out on Twitter. And one of the few master traders or indicator creators that are actually on Twitter these days. So Bollinger Bands are classified as an envelope indicator. Envelopes are a class of indicators. Basically, whenever you see, instead of a single line like a moving average or an EMA, you actually see kind of a range that moves with the price. So if you throw Bollinger Bands on your chart, and I will give an example of that towards the end of this slide of how to actually change up your inputs for Bollinger Bands, and how, like, an example of using the strategy, the textbook example, So it'll become pretty obvious. Envelope, basically trading range that moves over time. The tool is based on a simple moving average, which is a variation of the moving average. It is probably what you've been using if you are using moving averages, and an X number, or a selected number of standard deviations above and below. So standard deviations are a statistics concept, which basically represents probability of volatility. And that's what we get out of Bollinger Bands, because he's using standard deviations above and below that simple moving average. It'll make a little bit more sense when we show that example. So inputs real quick. Inputs are anything that you can change that will deviate what the default looks like. Sorry, how do I say that correctly? Inputs are things that you can change whenever you're setting up your indicator. You can manipulate them based on your time frame, based on the coin that you're using, but default of 220 will show up whenever you're using TradingView or Coinigy. It's actually what John Bollinger himself recommends for just about any single chart, but you may want to play with them over time. If you're just getting started, go ahead and start with the defaults. It's the easiest to learn from. So the inputs are X and X, or by default 2 and 20. 2 is the number of standard deviations, 20 is the number of periods. So you actually input periods for something like a moving average as well. So if you throw a moving average on your chart, you can change it from the standard of maybe 14 or 20 or 25, depending on what you're looking at, all the way up to 314. I have moving averages with inputs of 314 on some charts. You can change it up. Again, default is 20, but for the moving average and that second, or the number of periods for your input, is going to change your simple moving average for Bollinger Bands as well. So for 20, you are looking at the average of price movement, or the average of the price for the last 20 periods. So if you're on the daily candlestick time frame, your input is 20. You're looking at the average of the last 20 daily candlesticks of price action. For the weekly time frame, if your input's 20, the last 20 weeks. For monthly, last 20 months. So just a simple explanation of that. Bollinger Bands build on the SMA, or simple moving averages, measurement of relative trend movement. So simple moving averages give a good general direction of trend. They'll move sideways, they'll move up, they'll move down, along with a bull trend or a bear trend. But again, I didn't say this before, but they are a lagging indicator. So it's not going to give you the exact levels or the exact price movement for your current price. It'll be an average of the last 20 days, or the last 14 days, or the last 300 days. So it's lagging, and it's based on historical price action. So keep that in mind. And basically, Bollinger Bands use a combination of those simple moving averages and standard deviations away from your simple moving average to create a range of statistical probability. So going a little bit detailed for just 1 minute, whenever you have a standard deviation, basically you set it, maybe you have one standard deviation above the simple moving average, you'd say we have the highest probability of staying within this range, either above or below. If you have a curve or a yield curve, any type of curve that looks like this in terms of probability, and you have the top 95% and the bottom 5%, in the middle you have 90%, and that is most likely what's going to happen. If you compound this with multiple standard deviations, so you have 2 standard deviations above, it's 90%, 90%. That's not exactly how it's calculated, but the more standard deviations you have, so if you set 5 standard deviations, it is extremely likely that we are going to stay within those bands. By default, 2 standard deviations, and you don't really need to know the technicals of it, but it does kind of help to understand, and I'm sure a lot of people would enjoy that. So the textbook strategy coming out of Technical Analysis of the Financial Markets, one of my favorite books by John J. Murphy. He likes to say that he keeps a watchful eye first on the simple moving average, so the line in the middle, as an entry alert, and then the upper and lower bands as price targets. We're going to get a little bit detailed because that's not the whole story in just a moment as we finish this slide. But in general, just a final note, expansion of the upper and lower bounds point towards a rise in price volatility. So whenever we see our Bollinger Bands start to grow in magnitude, they're further away from each other. We're looking at larger amounts or larger magnitudes of volatility. Whenever they contract, we're looking at lower volatility. So just in general, as you're tracking your Bollinger Bands, let's go ahead and move over to an example on the chart, and we're going to talk about that strategy. So let's go ahead and move over. Let me take a look at TradingView. Let's set it up like this so you guys can see a little bit better. And we've actually got some Bollinger Bands set up on just an example chart that I was looking at this morning for a trade, but not trading it right now. KNC to US dollar tether. This is on the Bybit as well. This is on one of Bybit's pairs. So this is our current chart. We've got Bollinger Bands set up. That's actually the only indicator that's visible on the chart at the moment. And we actually can see it right through here. First, I'm going to show you guys how to add that. So let's remove it. We go up to the top here, right in the middle. We click on indicators, and let's see. Can you search BB? Yeah, you can. Bollinger Bands right through there. There's a few different variations, but we're just going to show the regular Bollinger Bands to start. A few people like to manipulate them and even code their own versions of Bollinger Bands. It might work out for them, but I haven't tested a lot of those out just yet. So now we have some Bollinger Bands on our chart. This is what it looks like. If you've ever seen some chart analysis, it's pretty obvious when people have Bollinger Bands on their chart. This line in the middle, this orange line kind of going through and acting, looking like a standard or simple moving average, is right through the middle. And then we have our top band and our lower bands. The top band is this blue line above, lower band, blue line below. The price through here is going to be, so if we look at this specific candlestick, this is going to be one standard deviation right through here. This level at $3.35 is one standard deviation above our current moving average at 3.23. And then as we move down, the measurement at this exact candlestick at this exact time is right around $3.12. That's going to be one standard deviation below our current moving average, or current simple moving average. So that's just the basic setup. If we want to change the inputs, we actually go through here. If we want to hide it, we click on that. If we want to change our inputs, we click on the little settings gear. And it gives us 1, 2, 3 different inputs, as well as offset, but I wouldn't use that too often. But there's really only 2 that I would start out with. That's going to be the length. This is going to be our number of periods. So if we change it to something like 50, it's going to be based on the last 50 periods. We're on the 4-hour chart, so the last 50 4-hour candlesticks. But we're going to change that back to the default because 50 does not look good to me. So we change that. And then we have the number of standard deviations. So if you guys can guess what's going to happen, let's say we change it to 5. Those Bollinger Bands are going to get way, way larger in magnitude. It is now 5 standard deviations. This price up here, this top band is 5 standard deviations away from our simple moving average. Bottom band, 5 standard deviations below. But let's keep that at 2 and get into the strategy. So based on the textbook strategy, whenever we see something like, let's look for a good example, and then we can get into a standard example because it's not always going to work out perfectly whenever you're just using one indicator. And I'll show you guys how that works out in this little section through here. So the strategy isn't just anytime we cross over the simple moving average, go ahead and buy. And anytime we hit the top side or the bottom side of our bands of our envelope, go ahead and sell. The strategy is actually, according to the textbook, if we bounce off the bottom side, so our lower bands through here, and then we come up, and what we actually do is we confirm whenever we cross over our simple moving average. So we need to see a bounce, or at least an approach, the bottom side of our bands, the lower side of our envelope first, and then we see confirmation as we, personally, I would wait for a close above, but you can just wait for price action above our simple moving average through here, and then you go ahead and set those sell targets near the top side of our bands. So how would that work out in this situation? What are we looking at in terms of, we actually closed above our simple moving average through here. Let's say you set your sell target right at maybe 1, 2, 3, 2 candlesticks later, you're looking at a 7.57% trade if you follow the textbook example exactly. But right before that, we see a situation in which the textbook strategy doesn't work out. That's actually going to happen not more often than not, but a lot of the times, depending on the chart. So we see this nice bounce off of the lower side of our range. We come up and we actually close above our simple moving average, but then we hug our moving average and we don't ever break out towards the top side of these bands. So if you were following that same strategy, you open your trade here and you're expecting a move to maybe through here for a 7.47% trade, very similar to the one that worked out. But you probably end up hitting your stop loss at somewhere between -4 and probably -3.5%. If your expected sell target is 7.5, keep that risk reward ratio solid and you're losing 3% there. But if it works out and you lose 3% on this trade and then you go ahead and make 7% on this trade, you net positive profit. But you're going to want to go ahead and look at a lot of the price action history based on your candlestick time frame, especially. So this is the 4-hour. If you're on the daily candlestick time frame, it's going to be completely different. So move over to our daily, and now we're looking at a completely different chart because our simple moving average as well as our upper and lower bands are all based on the past 20 days worth of price action versus the last 24-hour candlesticks. So it's going to look different depending on your time frame, and you're going to want to play with just about every time frame, especially if you are comfortable with specific ones. So let's get back to the presentation and do a little bit of technical analysis of some current charts. Let's see if anybody's talking about any specific coins. Good morning, everybody that's joined in so far. 4-hour candlesticks. Love it. Love the support. Where can I get a Bybit hoodie? They sent me this one. I'm not sure if they're for sale. I would check the merch section of the website. Always under trade. Good stuff, Marky. it's great that you kind of have that as a rule already. Giveaway. The giveaway is going to happen in maybe 15 minutes, right about 15 minutes. So make sure you have those Telegram and Discord IDs ready. And I'll show you guys how to enter that in just a minute. Thank you for joining, man. Can I use BBs on LTFs with high accuracy? What does LTF stand for? LTF. I don't know. It's away from me at the moment. Can we do chart analysis on Aave? We absolutely can. What time frame do you use Bollinger? I usually trade on either the 4-hour or the daily candlestick time frame for swing trades. Like I said about, or noted about, longer term time frames, I don't like to trade on the weekly or the monthly unless I'm, holding Bitcoin for a long time. Which then again, I'm probably not swing trading that as much. So for Bollinger Bands, if I'm going to use them, probably the 4-hour or the daily candlestick time frame for probably like in short to intermediate term swing trade. So let's take a look at Aave real quick. Low time frame IG with high accuracy. I probably haven't tested that too much. If I'm going to answer completely honestly, I probably can't give a really good answer for the lower time frames. I don't do a lot of super low time frame trading in general, so not a lot of exit or enter and exit within 30 minutes or within an hour. Probably nothing below right around the 15-minute candlestick time frame. I won the giveaway last week. You didn't contact me. So I actually submitted that. We have a system for submitting you as a winner. I submitted that into our system, and it's going to take right around a week or two for you to receive that bonus. But go ahead and reach out to me in the comments down below if by next week you haven't gotten it, and I'll ping them again. But I want to make sure you get that. But yeah, there's a little bit of a lag because it has to go through a few different systems to actually distribute those rewards. So let's go ahead and do some Aave chart analysis, or AAVE. Let's go ahead and move over. But yeah, I will make sure you get those rewards, and I'll keep you updated. You were the first winner, so we've got to make sure you get those. So let's go ahead and move over to Aave real quick. Let's find it. You can actually search for it. Here it is, actually. So Aave to US dollar. And I'm going to take the Bollinger Bands off for just a minute, but we can also try to do some analysis with those once I get my horizontal support and resistances up on the chart. Let's throw volume on the chart real quick because I like to always have that. And we're on the 4-hour chart. Let me know if you want a specific time frame, and I can move over to that as well. But let's start with the 4-hour and probably the daily as well. So just taking a look at some of the current price action, then we're going to move out to the daily to get another good time frame. You actually move through those steps that I was talking about whenever you first start looking at your specific pairs. Zoom this out a little bit, flatten it out. It's going to give us a lot of range, a lot of price action. Also, I don't think I've showed this yet, but I always keep my charts on the logarithmic time frame. I'm just kind of used to it. There are some benefits, and there are some reasons to use the regular as well. Maybe I'll go over that in the next stream, the logarithmic versus the regular time frame, or the arithmetic time frame. But I like to keep it on that. If you'd like to match up your chart with mine, it's Aave to US dollar tether on Bybit, and it is the log time frame on the daily candlestick time frame at the moment. So let's go ahead and see if there's anything towards where we see all of this price action through here. We're going to first look for alignments. We've got this breakout area aligning really well with our resistance where we couldn't see closes above. And this is the daily. So for a nice swing trade, this is probably about as far out as I'll go in terms of drawing functional support and resistances. And functional meaning I would actually set an entry or an exit based on what I'm drawing. We're going to make that red for resistance because we're currently below, our price is currently below that price level. So that's going to be our main resistance at the moment in terms of really the intermediate term time frame. Because it acted as a breakout, we've got confirmation through here. We weren't able to push above throughout this entire area. We spent a good bit of volume, good chunk of volume down through here. But what we're seeing now is a huge expansion of volume. So hopefully, if you're on the long side of this trade, we actually push straight past that resistance, because that's probably what I'm looking at the most at the moment. In terms of zooming in, we're going to look at our next breakout areas. So we're going to zoom in, and this isn't relevant at the moment. We've already broken out of this area, but you can see how we did see quite a bit of volume, not necessarily volume, but quite a bit of time that was required to push through that level. We rejected it once, twice, 3 times before we saw a close above right through there. So that's actually going to act as a support at the moment. Probably not a entirely relevant support just yet, because we are almost $100, like 80 or 90 bucks above that level at the moment. But yet again, this is a little bit of a longer term time frame. Longer to intermediate term. Let's go ahead and check out our next breakout area. That's just how I like to start. It's going to be right through here. And we actually already, I kind of, maybe because it was obvious, we identified this trend as bullish at the moment. So we identify as bullish, and now we're throwing up some just loose and rough little horizontal support and resistances. So that's next. And after that, we're going to look at volume. But in terms of what's relevant to the chart, we actually did see slippage. We can move out to the 4-hour time frame and see if there's any good alignment at that level. So this next level, what I would call our primary support based on what we have on our chart so far. So primary is the closest to our current price. Secondary is the furthest, which we only have 2. So that's going to be some pretty good alignment. We do see some nice bounces. We see some breakouts through that area. Acts as a nice little inflection area through here, almost a halfway point. So if you drew a fib retracement through that area, this would most likely be our halfway point without even measuring. And we come down, we see lots of slippage from the 4-hour because we're not on a longer time frame. And let's go ahead and zoom into our current price action because we are really on something closer to the longer term time frames at the moment. And this does act as a breakout area. Most likely, if we zoom into something like the 1-hour, we see a lot of butting up against right around 211. In terms of our current price action, we have formed that higher high. So there isn't a lot that we can really do in terms of confirmations because we've already seen one. We've already seen our price action and our absolute price, basically the shadows or our candlesticks, push above right around 242.55. We've seen a close above that level. So it should be nice and confirmed for a continuation of this trend. Most likely because we have seen, we didn't really see a lot of slowdown through this area through here. This is most likely the beginning of this leg, or right through here is our halfway. This is the beginning, the inception, and our confirmations above right through here. We see a nice close. We see a false breakout. We come down and then we actually whipsaw back up. So false breakout turns into an actual breakout. It's actually not as common as we would expect, but we do end up seeing the inception. I would consider this, if I was to estimate a halfway point, so we can measure that magnitude real quick. I'm going to measure from my breakout area rather than from our absolute low through here. And that's right around 40.91% in terms of absolutes. And from confirmation to close, right around 39%. So we can measure from our next breakout area, which I would actually call through here, because if you look at that price action, that was really quick right through here. Basically, we break down from support through here, we come back up, we break out, and now we have incepted that new trend or the next leg of our trend. So from here, I wouldn't measure that at exactly 40%. That would just be a little bit too standard, if I was to say, trying to beat out those other traders. Change up your strategy just a little bit. Don't set it at, exactly 4% because 40%, because that's what a lot of traders are going to be looking at. So we bring it down just a bit, and then we say, well, we're stretching through our resistance. And our resistance is at 276. So let's measure that again to our resistance and see if that would be any type of viable move. And that's right around 24%. That makes sense to me. Let's measure from our current price action, which it's just moving up as we are doing this. It's right around 10% flat. And if we want to beat out other traders, maybe we bring it down to close to 9.2, 8.9, something like that. So that's what we're looking at right now in terms of an active resistance. We actually do see a little bit of shorter term resistance right through here in terms of our breakdown area. We saw good confirmations through that entire area. We saw an approach through here, not a close approach though, so it doesn't hold as much weight as it would otherwise. Moving back, got some pretty good alignment in terms of our breakdown through here. We come back up, we break back down. It's really only relevant through here whenever we saw the confirmation towards the downside. So this is going to be our current confirmation, in my opinion. It's going to be right through here, right around 252.55. Looking for a trade. We would like, or I would personally like to see a nice little close above that level, and then a possibility for a long side position towards that area of resistance. So we see a close, we make sure it doesn't close, all the way up here. If it closes all the way up here, then it's not even worth trading because that's 1.71%. But if we close towards probably the lower half of this nice little range through here, or the magnitude between our confirmation and our resistance or our sell target, as long as it's below there, you're looking at anywhere between 5 and 9% for that sell target. So that's what I'm looking at the moment in terms of an active trade for AAVE to US dollar tether. But I'm going to actually check the chat and see if you specified a time frame. Which of the time frame is the most advisable? That's going to depend on your time frame for your specific trades. So personally, I like to enter and exit trades no more than a month. I'd say that's my absolute max, but if I was to say an average, right around a week or two. So I like to focus on the 4-hour time frame for that. and confirm or align things, look out to the daily or the 3-day time frame. But I'd say most often for that time frame, for like what I would consider short to intermediate term, right around a couple weeks, a month max, for between getting in and out, I'd say I like to favor the 4-hour. You can move into the 2-hour. I use that pretty often, but a lot of the times it does. We do see penetrations through those 4-hour support and resistances. So it doesn't help there, but if you're looking for, more specific price action and you'd like to zoom in, 2-hour works just fine. Daily works just fine for confirming those as well. Do IMX. Let me check if IMX is a good pair. Not a good pair, but if I have it favorited. Otherwise, I'll look it up. But that's what we have for Aave so far. If you want a longer-term price action or longer-term TA, go ahead and drop that in the comments, and I can move back to that. So it looks like I don't have that favorited. I can search it real quick, and I've already forgotten IMX. Whoops, I stopped sharing that. Quick slip up. Let's go back to sharing my screen. Sorry about that, guys. Share. And let's find IMX to Tether. Let's see if there's a Bybit pair. Looks like there isn't. Let's see if there's a pair with some good volume. So I'm guessing we're gonna do IMX to Tether. We can do it on Huobi, and then we can check on maybe Binance or FTX or even Coup Coin. Actually, let's start with Coup Coin. It's really on a lot of exchanges. Hopefully, Bybit will list that one soon as well, so that you guys can trade on there. So let's go ahead and see what we're looking at. I wonder what the volume is. Let's go down here, 1.821. So kind of low volume in terms of what I would personally trade. 1.821 tokens or coins by right around 250. That's actually not terrible. Excuse me. That's good enough volume for me in terms of having enough liquidity and not worrying about super erratic price action. So actually, it looks like a really nice coin to trade. Maybe I'll look into this for myself. But it looks like we have some nice sideways trading ranges, and this is what I was talking about in terms of those repeatable trends that you can trade. Is if you actually set up a sideways trading range for something like there, set up a nice little average. Although we do see volatility start to shrink over time, you can set it up as a trading range just to get started. Excuse me, I need to have that coffee. I need to burp real quick. So we set some support down through here, and that's a good average. We see slippage through here. We might want to bring it down just a little bit depending on how frequent you've been trading that. And we see alignment through here in terms of an approach, not a touch. Should have eaten breakfast this morning. The coffee it's all in the stomach. So that's what we're looking at so far in terms of our most local resistance. So because our price action or our current price is below there, it's going to be acting as resistance. The top side, we don't see perfect alignment. This is most likely really nice or really, really fast slippage to this area. So it's kind of hard. Like in terms of a standard setting your resistance, you would probably go, oh, that looks like really nice resistance, but it's almost, I don't really know how to refer to it properly, almost like a fake resistance whenever we see not perfect alignment, but really quick, like a tweezer top through there. Same with the downside. If we see a really quick tweezer bottom, like we see through here, sorry, I'll zoom into that. It's actually like, it's not very useful to use that as an absolute low. You can use it in terms of counting higher lows and counting higher highs and such. But in terms of support and resistance, it's not very honest. So if your support is down through here, anywhere between there and there, resistance kind of for the breakout, we actually want to move higher for that. But just in terms of anywhere between 1.506 and 1.509, you would actually set your support not at the bottom of these closes. You'd set it at the bottom through here where we have the most alignment in terms of previous price action. So that's just something that kind of can slip people up. It slipped me up for a very long time, is seeing those tweezers slip straight through what we actually thought would be support or resistance, and it does almost act as a whipsaw. So right through here is probably where I'd estimate. I don't know if I would set sell targets there in terms of a trading range, but we're actually past that, so we can move on. I'm really just looking at this price level through here, probably a nice close above that level. This is the 4 hour. We can move into the 2 hours, see if there's any more information. And we've got still pretty nice alignment. Looks like it acted as a breakout area right through here where we saw this nice little doji. We push up, and that held pretty well in just about every circumstance. 2 examples of breakout confirmations. 1 example of a nice hold from the 4 hour. We see a little bit of slippage from the 2 hour. That's just going to happen. And then towards the long side, again, almost a tweezer through here. That's a really nice formation in terms of back towards the downside, or just like a 2 candlestick Japanese formation. So I think that's fine for the long side. We probably won't be setting a sell target exactly at those levels. So we move back to the 4 hour. Everything looks good in terms of what we just talked about. We move out to the daily and we see if there's anything in the longer term that's going to debunk our current thesis or just the support and resistance lines we've drawn on our chart. So this is probably my least favorite little formation to draw in terms of a 4 candlestick formation, in terms of identifying technical analysis for, or identifying support and resistance for, excuse me. Let's get into that time of the stream where I mix up words, but it's going to be an option. It's going to be between here and here. And the only way we can clarify that is by moving out. So we move up through here, and we're really depending on a lot of historical price action at this point, which isn't my favorite. I prefer as local of price action as possible. We move up to the top side of this. We look for alignment yet again, and just nothing's perfect right through there. So it's going to be really hard to set a sell target for this, assuming confirmation and a close above our current resistance. If we set our confirmation at right around 2.56, we can actually measure that real quick and see if that would even be a feasible trade. From there to there is right around, yeah, it's completely feasible. 5.67, bring it down to 4.8, something like that, even a little bit closer than that. So at the moment, I'd say we're probably waiting for a close above where we previously saw support. We saw some really nice confirmation through this whole area, acted as a solid trading range like we saw through here, although it was kind of chunked up. So we see trading range through here, trading range through here, trading range through here, a little bit of a diagonal trading range. That's going to happen a lot of the time. We see a very clean one through here in terms of actually filtering through these tweezers, or this tweezer through here, the slippage on the 2 hour, filtering out some of the volatility and that erratic price action. So that's what we're looking at right now. Nice little close above that level, and probably a shorter term trade, probably securing profit as soon as possible. Definitely not moving up all the way to the top side stretch. So definitely not all the way at 5.38. I'd be very conservative on this one, just based on the fact that we see almost a halfway point act as our breakout area. And I probably would only trade this with leverage for a very short-term trade. So right around 2.51%, probably just below there. It's just a little bit tricky at the moment because of the magnitude from the bottom side support to the top side resistance. So let's go ahead and move back. Let's see. H bar. We'll do a quick H bar, and then let's do that giveaway. So let's do H bar real quick. Live in India. Welcome. Good weekend, everybody, and good morning. I'm new to this. How much is the minimum to start? Absolutely zero. You can get started paper trading. There are a few websites out there. They pretty much all do the exact same thing. You're not using real money, but you are following the actual live markets, and you can set up trade outlines. You can learn at the same time. But again, I don't think I mentioned this in the past. I keep saying again for things I haven't mentioned, but a lot of the time, using real money is going to help you a little bit more than paper trading. So I wouldn't recommend, paper trading for 6 months and then starting slow with real money. I would recommend paper trading just a little bit to understand the order book, understand trade formats, everything like that, researching the actual kind of the technical, not necessarily the technicals of the chart, but the technicals of the trade. How does an order look whenever it goes through, whenever it doesn't go through, how to set up a stop loss, everything like that. That's probably best to do that while paper trading. And then once you're actually getting into the technicals, just start as low as possible. So if you want to throw in $100 and just say, I'm completely fine losing all of this money, you trade with, $4 or $5 per trade, even lower than that if you want. It's all relative. So if you throw in $1,000 and you're willing to lose all of that, then you start trading with $20 per trade, as low as possible, because you're going to be losing the most amount of money and you're going to be the least successful in terms of profitability and a success rate for your trades as we get closer to when you first start trading and you first start learning. And then obviously you slowly build up over time. Once you are very comfortable with your favorite charts, you're very comfortable with your strategy overall, then you start to slowly ramp up how much you're investing per trade. So that's my best advice for getting started and how much to actually start with. But there's no minimum at all, especially for crypto. It's not like stocks where you got to buy a $6 stock. You can buy any increment you want. Let's do H bar real quick. Let's get into that giveaway. So for that giveaway, remember, you either need a Discord or a Telegram ID or @ and then I'll show you guys how to actually enter in just a moment. We're going to do it all live, as well as picking that random winner. Not too many people in here yet again. So you guys will have a pretty good chance of winning that spot giveaway of $100 US tether. So H-bar at the moment, let's zoom out to the daily. Let's determine that trend. Currently in a intermediate term bull trend, really a short to intermediate term. That's only been about 2 weeks. Short to intermediate term bull trend, and we're seeing a nice contraction from right around 25.4 cents on the close, and on the actual peak, right around 27 cents. So let's go ahead and get started with just drawing that through there, because that's going to be an important level. That's where we rejected in terms of pushing higher. Same thing with our closes. So we do have really good alignment for closes through here, and that aligns with our absolute topside shadow through here. But we also have closes through here, which is most likely going to align with some type of breakdown. Doesn't perfectly align through here, doesn't align through here. We can move back a little bit further, and it looks like it kind of aligns with our breakout through here, but we're going to need to move into the 4 hour to really get an understanding. And I don't think I'm even going to draw a resistance at that level from the daily. We can draw it and then we can always move it. So that's what we have from the daily on the resistance side. On the support side, it looks like we've got some alignment through here. Depending on where our current candlestick closes, we do have 7 hours left. You can see the countdown through here. 7 hours left before this daily candlestick closes. Let's just draw it, and then we can always change it. It's currently acting as a support because our price is above that level. And anything below there, we can always zoom back out. If we're looking towards the short side, we can always zoom back out and look for short side supports for sell targets. So it actually looks like some pretty good alignment for that support. So let's keep that where it is for now. Acted as a support and a bounce with no closes below that level, and then it acted as a breakout area and a breakout confirmation through here. We come back down, we see our bottom side shadow. I can really zoom in there. Our bottom side shadow touch up and meet that exact price level. You can see our close through here, and we saw a slip through for that bottom side, that next bottom side shadow that really allowed us to push up and close that green candlestick. But I would keep that right where it is for the 4 hour. We might zoom into the 2 hour, but let's see what we can get from the 4 hour first. We had a really nice build up through here. Volume stayed relatively consistent, rose just a little bit. We saw just a lot of 4 hour candlesticks of net buy volume to align with this nice little rally through here. It looks like we saw a very small amount of sell volume until we got to here. So just a quick rejection of this price level between right around 24.8 and 24.7 or so. And then we see just this big breakdown, and we actually hold at that support, which is what really confirms us as we move into our local price action. So the reason that we held this area, as we didn't hold it in terms of closes, but it formed as a breakout confirmation, was because we held it back through here. And it's our most local price action. In terms of this top side, these top side closes we were looking at from the daily doesn't align well at all. It does act as an inflection area for that trading range, or what was almost a W through here. Let's zoom out just a little bit. I would just call that a trading range. There's no need to really specify the shape. It did act as a breakdown area through here, but we just didn't see it reject. We didn't see it reject on the 4 hour. We saw multiple pushes above, and we didn't have a lot of trouble. It just acted as an inflection zone. So we're going to take this off the chart for the moment for our current time frame. We're going to leave our absolute high through here at 26.9 because that's still going to be important. And let's go ahead and look at the relationship between this high through here and these lows through here in terms of a support or resistance flip. So if we look at our bottom side shadows, there's really good alignment. We look at our top side close through here. There's decent alignment, axis approaches through here, but I probably wouldn't set anything just near there. We move up, these bottom side closes, again, not perfect alignment, but again, not good alignment back through here. So I would go ahead and use those bottom side shadows as an estimate. I wouldn't actually set, what did I call it before? Like an active level for that. So I wouldn't set a confirmation or a sell target through there just yet until we zoom in and we get some better alignment from that. So we're looking at an approach to that level, but a little bit of margin between this top side shadow. We're going to need to see a little bit more price action before we most likely see a really good confirmation. We're most likely going to need to move up just a little bit further and see some closes above 249. That's going to be my lowest confirmation for this level. If you want a higher confirmation, you could probably just align with these bottom side closes. Right around 0.25. Again, decent alignment with psychological support and resistance. moving back out. I think that's fine for now before we get into all this historical price action from the 4-hour. It's a lot easier and a lot more applicable, the historical price action, for something like the daily or the weekly or the monthly chart. But if you zoom into the 4-hour and the 2-hour, you're really going to want to focus on that local price action. Again, nice little tweezer false breakout through here. We see those far too often. Same through here, kind of a yin and yang, a little opposite move through there. And we're still seeing good alignment, in my opinion. Not necessarily ignoring these, but just understanding what happened with this tweezer top, this tweezer bottom, that it doesn't really reflect true resistance or support. So we're going to keep it right through there. And that's going to be my main level at the moment for the short to intermediate term. Setting sell targets is going to be difficult yet again because it's a trading range in the top side. I don't know if there's great alignment. If we had a nice breakdown area in terms of our historical price action, that would probably be the best. Let's go ahead and measure those and just see how it would look. Just see if it would even be worth it. So we see a close above that level through there. Top side of the trading range in terms of an average, right around 3.51%. Actually, no, in terms of the 2-hour, we're building up higher lows. I didn't even recognize that. So we're actually building up higher lows throughout this entire area, and that's almost a flat resistance through there. All right, I completely missed that. So I'm going to set my resistance through there. So first resistance and confirmation is right around 24.8. I would be a little bit more conservative, set it above 25 flat. And you're looking at a long side trade to that area of right around a 3.94% stretch. Bring it down just a little bit to beat out those other traders. 3.45, 3.5 or so is fine with me. And if we see a continuation, you can go ahead and sell the rest. Not necessarily sell the rest, but separate your position as we move higher. So that's what I have for H-bar at the moment in terms of, I call it the short to intermediate term. Thanks for the H-bar TA. One of your favorite coins. Awesome. I love H-bar as well for trading. Not super into looking into the fundamentals anymore for a lot of these smaller coins, but actually H-bar is pretty big these days. But I just haven't been as active in terms of looking at the fundamentals, but I really do like the chart. That's my stance. Live from Tokyo, Japan. Awesome. I bet it's already the weekend for you guys. Let's go ahead and do this $100 giveaway. So everybody get your Discords and your Telegram names ready. I'm going to show you guys exactly how to do it, how to join real quick. So first I need to move over here, and I pulled this up, share this tab, present. I'm getting this down, and I need to open voting. So here's what we're going to do. Let's make sure that you guys can see this. Here's what you have to do to enter. You go to menti.com, and you're going to type in this 8-digit code, I believe with a space in the middle. So the code is going to be 4203-0331. Again, 4203-0331. You can do this on your phone. I've tested it before. You can also do it on your computer in another tab, www.menti.com. Enter that code, and let's go ahead and make sure. All right, everything's open. So you guys will be able to go ahead and submit your Telegram or your Discord names. That's fine already, but if you're about to do it and you can add like Telegram or Discord at the end, that'd be great as well, but it's fine. Otherwise I'll select the random winner and then I'll ask in the chat. So make sure you're active in the chat once we've selected, so you can let me know if it's Telegram or Discord. In the future, I'll let you guys know to go ahead and add a little specification. So we got 4 people already. We're already doubling the number of participants from last time. We've got Oluwazandi, who won the giveaway last time. Yet again, I'm going to make sure you get those rewards. I'm tracking that pretty well. So 6 people, and let's go ahead and set like a timer for 1 minute. So 1 minute until it closes, because we are already past the 1 hour for this live stream. But if anybody, no, I think we'll close it at 1 minute. So make sure you get those in. I feel like I've given people a chance to like open an account if they don't have one already. So we don't want this to take too long. 6 people are ready. Good luck, everybody. I will be randomly selecting these winners in a fun format. All right. I'm going to check the chat to make sure nobody's like, give me a second. Can I submit it here? No, you have to submit it on menti.com, because that'll give me a list. So guys, make sure to submit it there. Looks like we got some people. Everybody's saying, okay, can I extend this? I'm going to give it one more minute just because people are saying that they submitted it in the chat. So one more minute real quick. Go ahead and go to menti.com and please submit it there, because otherwise I won't be able to add all of the names. So please submit it on the website rather than in the chat. Can you share the link? You have to type in menti.com and type in the code, and it'll let you join. It's the only way you can submit. So 40 seconds. Make sure to do that real quick if you want to join. All right. Looks like people are adding them now. That's good. Since I'm new here, just go to menti.com. The link is up at the top of the stream. I can type that in. You got 20 seconds. I can share links. Try to do it nice and quick. 15 seconds. And I will be closing this. This will be a hard close, so make sure you submit. If you don't get submitted, we'll be doing another giveaway next week, so you'll have a chance as well. Sorry if you missed out. If it's confusing, I'll make sure to give it a little bit more time next week. All right, so we are closed. What I'm going to do is I'm going to have to download this list real quick. So we're going to do this. Let's go ahead and switch over and download this list, and I'm going to select them randomly. And I'll show you guys in just a moment. So again, sorry guys if you didn't make it in, but I think it would be a little bit unfair to keep extending it to the people that were ready. But next week there will be another chance. This is definitely not the last chance. So here's the list. Looks like we've got right around 14 entries. Let's double check that and just make sure that those are all the entries real quick. Looks like we got, oh, no, I missed one. So let me redo that. So we got 15 entries. Sorry about that, guys. 15 entries. Let's go ahead and do this. This was everybody that submitted on menti.com yet again. You got to make sure you do it through the program so that it's all official. So we're going to spin this. Good luck, guys. Let's do it. Spin. Oh, that was close. Ace Tylene. Ace Tylene, if you are in chat, go ahead and drop your, if it's either Telegram or Discord, let me know if that's your Telegram or Discord name, or both. Sorry about that, Juwano. I know you're late, but we will do another one next week. And you guys will all have a chance to win yet again. So, yeah, 16 entries, pretty good chance to win. Yet again, it's completely random. So Ace Tylene happened to win this time, but you'll definitely get a chance next time as well. That's your Telegram. All right, I will write that down, and we will make sure to distribute those rewards, or I'll submit to distribute them. Again, sorry guys, it does take maybe a week or two before you actually receive those rewards. It's just how it goes through the system. I can't change that, but you will definitely get them. And the winner from last week, I'm gonna make sure that you get that reward. I'm not gonna forget about it because I really like doing these. It's a lot of fun. But there's our winner for the week. Let's go ahead and close out the live stream. I'd like to thank you guys so much for not only for participating in the giveaway, but also sticking with me throughout this entire little process, these last 3 live streams and the lectures that I put together for them in that live analysis. I'm always open to on Discord. If before the live stream, if you won't be able to watch live, if you're in a time zone which you can't watch live, in Discord, you can go to the Crypto Beat channel on the Bybit Discord, and you can actually submit your request for technical analysis. I will look at that before the stream. I'll write it down. I will come in and I will do the analysis live, and then it all gets uploaded as a video or as a VOD recording of this live stream, such that you can actually get that analysis and view it even if you can't watch live. So go ahead and check that out, or you could drop it during the live stream as well, like a few people did during this chat or during this stream. I'd like to thank you guys so much. Good luck on next week's stream for that giveaway as well. And I hope you guys will join me yet again, and hopefully for every stream in the future as we keep doing these, because I'm having a lot of fun preparing them and presenting them and hanging out with you guys on this beautiful Friday morning or Saturday morning, super early Saturday morning for some of you guys that are on the other side of the world. thank you guys so much for watching. This has been Brandon with Bybit YouTube. We're making some really cool content. You can check out the Crypto Beat series on YouTube, Bybit's official channel. We come out with one of those every single Monday. And yet again, these live streams come out at 5 p.m. UTC on Fridays. So go ahead and search Google if you have a different time zone from that, which you most likely do, to find out exactly when they come out. Because if you watch them live, you will get a chance to win that giveaway of US dollar tether spot, sorry. And we're going to keep doing those moving forward. And they're only going to get more exciting. So thank you guys so much for watching and for joining in live. You guys are the best. It's so much fun to do some technical analysis with you guys and talk about trading. It's one of my favorite things. So I will see you guys later. Thank you so much. Have a wonderful weekend, guys.